Alright, so good morning everyone and welcome to another training session for Danuvie Crypto Systems. My name is Daniel Uvietesiwi and I am your host, and I am also the Chief Programming Officer at Danuvie Crypto Systems. And in today's lesson, we're just going to be talking about something very brief before we go into our chart analysis, because I have said that from subsequent videos we are just going to be going into majorly chart analysis so that we can train our eyes to be able to spot support, resistance, and when there's an impulsive move either to the upside or to the downside. So, and what we're going to be talking about briefly before we go into our chart analysis is going to be how dollar strength or weakness affects crypto and what drives the dollar. So I'm sure most of you guys will be aware that when the dollar gains strength, crypto actually falls. And when the dollar falls, crypto gains some strength. So we're going to be talking about what actually makes dollar to gain strength and lose strength, and what actually drives the dollar. So let's go right into the video. So as you can see on the screen, it says how dollar strength or weakness affects crypto and what drives the dollar. Now it says here, the value of the US dollar has a major impact on the crypto market because most crypto assets are priced against the US dollar. Exactly. Now if you look at the major cryptocurrency assets, you have Bitcoin, Ethereum, Solana, XRP, LTC, and the rest of them, TON. If you look at their pair, their currency pair is usually paired against the US dollar. Now, when the dollar moves, crypto often reacts in the opposite direction. So you see, so if dollar is weakening, if you look at it, the pair is usually Bitcoin USD or Bitcoin USDT. Now, if dollar is gaining strength, you will see that the chart of Bitcoin is going to be going down, which means the price of Bitcoin is going to be going down, because in that current market, people are changing their Bitcoin from Bitcoin into US dollar. That's why the US dollar is gaining over Bitcoin. And that's why the prices are going down. And if you have noticed, currently now we are experiencing a very big bear market in cryptocurrency, because right now the dollar is gaining strength over cryptocurrency. That's why if you go to the chart right now, you're going to see a very big bear market, which means prices are falling in crypto. So, but after this topic, we're going to go into the chart and you're going to see how crypto prices are falling. So when the dollar moves, crypto often reacts in the opposite direction, like I've said. So when dollar strength is, this is the DXY. Now, if you are on TradingView, you can actually, let me just highlight it, DXY. You can actually search out that index. That's the official dollar index for the US dollar. So you can check whether the dollar is gaining strength or losing strength. So that's DXY. Now, a strong dollar means investors prefer holding USD because it offers stability or better returns. Exactly. So if investors are skeptical about risky assets like gold, cryptocurrency, stocks, they prefer to save their money in US dollar. That's if they are very unsure about what's going on in the financial markets, they prefer to put their money in US dollar. So effects on crypto. Crypto prices usually fall. Money moves out of Bitcoin and altcoin into USD, like I've said. So if we are having prices are falling, rather, if prices are falling in crypto, investors will rather change their money from crypto into USD just to act as a safe haven. So they don't lose the value of their money. So money comes out of Bitcoin and altcoins into USD. Now market sentiment becomes more bearish, like I've said. Now dollar up, crypto down. Exactly. So when dollar gains, cryptocurrencies fall. So let that be a formula for all traders who are under the sound of my voice now. When dollar is gaining, be expecting cryptocurrencies to fall. And when dollar is falling, be expecting cryptocurrencies to rise. Now, when dollar weakens, a weak dollar makes investors look for assets that can preserve or grow their value, like I've said. So when the dollar is weakening, investors will prefer to move their money into risky assets like gold, crude oil, cryptocurrency, or even buy a stock. Because if those risky assets gain value, it's going to appreciate their money. So they would rather change their money from USD into these risky assets so that it can grow their portfolio and give their portfolio more value. So that's what the note is trying to say. So effects on crypto. Crypto prices usually rise, which means the dollar weakens and cryptocurrency prices rise. Now, more money flows into Bitcoin and altcoins. Strong bullish momentum builds. Dollar down, crypto up, like I've said. So now we're going to look at the economic factors that strengthen or weaken the dollar. Let's see if we can run through this quick. So the dollar is heavily influenced by US economic conditions, global risk sentiment, and Fed policy. Below are the major factors. Now let's look at the first one. A is interest rates. Now, Federal Reserve policy. Now, higher interest rates strengthen the US dollar. Now, if you ask, what are interest rates or what is interest rates? Interest rate is simply the rate you pay whenever you go to the bank to acquire a loan. Just like you are going to take a loan of 1 million naira and the bank is charging you 10% interest. That 10% is the interest rate. So, interest rates is simply a way of regulating inflation in a country. So the banks don't give out money into the economy or into the general population, because inflation is going to, number one, is going to kill the purchasing power of that currency, and number two, is going to encourage an increase in prices of goods and services. That's what inflation usually does. So interest rates is simply like a regulatory measure that banks and the central bank use to regulate prices of goods and services, and also regulate how much money is in circulation. That's what is called known as interest rates. So higher interest rates strengthen the dollar. Yes, I will explain this now. Now, the reason why higher interest rates will strengthen the dollar is because interest rate, the higher the interest rate, the more expensive it becomes to get a loan. I'll take it again. Now, the higher the interest rate, the more expensive it becomes to get a loan. And the more expensive it becomes to get a loan, the fewer people are going to be going to the bank to seek a loan. And if fewer people are going to take a loan from the bank, the lesser the amount of money in circulation is going to be. That's why it says higher interest rates strengthen the US dollar. So when interest rates, when money is not being pumped into circulation, the dollar is going to gain value, and prices of goods and services is going to drop, because the dollar's purchasing power is going to be very strong. So that's what it means by higher interest rates strengthening dollar. Now, investors get better returns on holding US dollar. So you can see that. Now, foreign investors buy more USD, invest in US assets. Exactly. So high interest rates, strong dollar, and crypto drops. Remember, a strong dollar will always make cryptocurrency to drop. Now, lower interest rates weaken the dollar. Now, lower interest rates means that the loans that banks and central banks are giving out to consumers are going to be cheaper, or they call it cheaper interest rates. So it's going to be easy for you to get a loan. So which means the government is actually encouraging more money to be pumped into circulation. And by doing this, it's going to create inflation, prices are going to go up, and the purchasing power of the currency, which is the US dollar, is going to be devalued. So that's why I say lower interest rates weaken the dollar. Less demand for dollar. So you can see that investors search for higher return assets like crypto, because our dollar is dropping, cryptocurrencies are going up. So investors will look to protect their portfolio by taking money from the US dollar into cryptocurrencies, because cryptocurrencies can give them higher returns at that particular point in time. So that's just it. Now, let's go to the next one, inflation levels. Now, high US inflation levels usually weaken the dollar unless the Fed aggressively raise rates. Like we've already said that in the previous point. So low inflation supports a stronger dollar because purchasing power is preserved. Exactly. Now, I think that is self-explanatory. So let's go to the next one, employment reports, which is the jobs data or non-farm payrolls. I believe in my last video I talked about the non-farm payrolls. Yeah, and we said that the non-farm payrolls is the all amount of jobs added to the US economy except from agriculture. That's except from the agricultural sector. That's, you have to talk about medical, the engineers, the media content creators, the, civil servants, education, all of that. All jobs added to the US economy except from the agricultural sector. That's what's called non-farm payrolls. I can quickly highlight that for you. That is it, non-farm payrolls. So this is a very, very important news that affects the US dollar. Now, stronger job numbers, a stronger dollar. So you can see that. Now, any news that is positive for the US economy is going to strengthen their dollar. Now, a stronger employment figure is going to be very, very positive for the US dollar, which means if the news comes out and we are having 200,000 jobs added to the US economy, that's going to be a very strong indication for the dollar, which means because there's going to be a boost in the economic workforce, on the labor force, there's going to be more productivity, more creativity, and that's going to add more value to the US economy when it comes to GDP. And a higher GDP turns into a stronger US dollar. So weak job numbers leads to a weaker dollar. Exactly. If for this month we're having 200,000 jobs added, and next month we're having 150, that's a weaker number than the previous month, and that's going to actually drop the strength of the US dollar. So jobs report affects expectations for interest rates, which directly affects the dollar. Yes. So let's go to the next one, which is economic growth. That is GDP. Strong GDP growth, more investors' confidence in dollar. Exactly. So, and if you are asking what is GDP, GDP simply means the gross domestic product. What is the gross domestic product? That's the amount of money that has been raised in a country in all sectors of the economy. That's what is called GDP. In the educational, manufacturing, all of that. So a weak GDP will lead to a weaker dollar, because nobody will want to hold dollar at that time, because the GDP is very weak. The economy is not doing very well. So GDP is going to drop. And GDP drops, the US dollar is going to drop as well. So let's go to the next one. Global risk sentiment. Now, risk off mode, stronger dollar. When global markets fear recession or crisis, investors rush into USD as a safe haven. Exactly. So, global risk sentiment. A lot of investors globally, even in their own country, when they are having risky sentiments or they are having fear of other assets to invest into, the best thing they can do to protect the value of their portfolio is to put their money in US dollar. So this is why it says global risk sentiment. People around the world also monitor US dollar. Major big time investors around the world, they are also looking at the value of the US dollar, because from their own perspective and their own investment view, when assets that they want to invest into are not doing very well, the next place to seek a safe haven is to put their money in the US dollar. So these are some of the things that actually affect the strength and the weakness of the US dollar. So I think that one is self-explanatory. So let's go to the next one. Okay, let's just finish this one. When markets are optimistic, investors move into riskier assets like crypto. Exactly. So investors are not really certain about what's going to happen on their own end and their own portfolio. So what they do is they remove money from their portfolio, put it into the US dollar, just to save it there until when there is something good looking for their own investment ideas, then they bring it back. So basically, geopolitical events, these are majorly war, political instability, and global tension. The war that is going on right now in the Ukraine and in Israel, these are some of the things that actually affect the US dollar as well. Yeah, so global tension often increases demand for USD as a safe haven. Exactly. So like the war going on in Russia and Ukraine now, people in Ukraine now, because whenever there is war in a country, the value of that currency of that country goes down, because number one, there's not going to be job, nobody's going to be working, there's not going to be job employments going on, the job numbers are going to reduce, their GDP is going to drop, the strength of their economy is going to drop because of the demolition and the bombing and the killing of people. So